US expanded its primary deficit by 40% of GDP from 2017 onwards. The closest major economy that came anywhere near that was Japan at like 12%. So you got to understand, it wasn't a global fiscal expansion, it was an American fiscal expansion. The bond market is saying no more.
Marko, the godfather of GeoMacro, term you coined. Glad you're here, because if you didn't understand GeoMacro before, you certainly understand it after the last month that we just had in the markets. Insanity. Precious metal ripped higher, commodities going up, the value of the dollar against other currencies was going down. A reporter asked the president what he felt about the dollar. He said the dollar's fine. Then we have the Treasury Secretary Debasement come out and say, oh no, the U.S. has a strong dollar policy. 2 days later, Warsh is announced as nominee for Fed chairman, and metals get a smackdown. And that all was in about a 3-week period, right? Like just
3 days.
Amazing.
3 days.
Yeah, right. It's just incredible. It's what a time to be alive and be a GeoMacro strategist. So just give me your thoughts on all of that and how it might impact BCA's research moving forward.
Well, first of all, I think from a sort of a boring epistemological perspective and business development, it is impacting us because, BCA stands for Bank Credit Analyst. And in 1949, analyzing bank credit seemed like a pretty innovative thing to do. 77 years later, we've had to develop our internal politics and geopolitical capabilities. First, as an exogenous level of analysis, so I led that effort from 2011 onwards at the firm. That was more of a classical way to think about politics and geopolitics. It's sort of like, hey, let me think of my investment view right here, and then I'll put something on the back burner, like in a little pot on geopolitics, and I'll try to add it on top of the view. That's no longer what we really do. What we do now is just smash it all together because I don't think you can be a macro investor if you don't start with politics and geopolitics. You can't wait until you have a view to then think, oh, well, how will this impact? No, that's too late. Your view without devoid of politics and geopolitics could be completely wrong. I'll tell you something, Ed. I was just speaking to a client of mine in Newport, just really smart asset manager, lots of experience, and grew up in a developing country like myself, and said to me, Marko, I feel like in today's world, it's kind of like back home where you needed to know what the government was buying to make money. So can you tell me what the government is going to buy over the next 12 months? That's the world we're in. And I'm not saying that's going to necessarily work. I'm just saying that investors are starting to realize this is a whole new ballgame. So yeah, how is it impacting us as a firm? I mean, it's at the very core of our DNA. We're mutating our DNA in real time.
Do you have the sense, we talked about this a little bit before we started rolling, but the sense that everything in the markets is happening more quickly than ever?
So yes, I'm not sure that's because of politics and geopolitics. I think that's, let's say, Ed, you and I were doing this in 1984. I think that if we had X, Twitter, if we had YouTube, if we had access to the speed of information, we'd still be thinking about, all sorts of stuff that was very cogent in 1980s in much faster pace. But I do think that there's a coalescence of 3 big picture trends. First of all, Robinhood and the ability of any Jack, Jill, and Jane to sort of just start putting on options, trading geopolitical events, geomacro events. I think that's a game changer, number one. 2, the pandemic made us all doom scrollers and armchair geopolitical analysts. And then 3, just the speed of information. So yes, I do think that things are faster. At the same time, that means that often you will have certain assets just get stretched to their finite level where they may end up, like what happened with gold and silver this month. They get stretched maybe too far, and then something happens like President Trump, appoints a pseudo-hawk who was once a monetarist who, may or may not really make sense if you're all in on the debasement of the dollar. And then, these metals Now, it doesn't mean that your original thesis is not right. It's just that too many people are trying to interpret, 10-year moves on their Robin account. So that's Robinhood account.
And it's distorting the market, basically.
Yeah, it's distorting it, but it's also, I'm not going to fight it. I'm going to embrace it because that's just the world we're in today. It's just, and ultimately it's what butters my bread. So I'm not going to complain about all the.
So where do you stand, Marko, on the whole idea of debasement of the dollar? Which is sort of not exactly the same question, but a cousin of the question. Is the reserve currency status of the U.S. dollar at risk?
First of all, I really don't like the term, even though I'm guilty of using it myself, at least in 2024 and 25. And the reason I don't like using it is because it gets folks over-indexed to sort of super hard real assets. And we saw what happened with gold and silver this month. Now, I've been bullish gold from January of 2023 to March of 2025 when I said, I've had enough. 60% return is good for me. So my worst call last year, the worst call was the opportunity cost of not having stayed in gold longer. But one of the things that I explained is that I do think that the debasement trade people got a little bit too excited. I think that monetary policy of the United States of America is going to be too dovish. Whatever it is that you think it should be, it's probably going to be more dovish than it should. I believe that the United States of America brought forward a ton of growth through unsustainable fiscal policy, and therefore there is a comeuppance trade. I believe that American assets, including the US dollar, are way too overvalued. So, but that's not debasement necessarily. That just means that we're going to enter another period of dollar decline that I've compared to 2002 to 2007. During that time, the US dollar fell 35%. So DXY went down to 80. That's a 35% decline from 2002 to 2007. The US did not lose reserve currency status. And I don't think you can really argue that the dollar was wantonly and purposefully debased during that period of time. I can build a macro case for why the same thing is going to happen this time, why we end up at 80 DXY without any sort of, momentous kind of terminology of it being debasement. And so I don't think it's debasement. I just think that US dollar is too expensive. A lot of US growth over the past 8 years has been pulled forward through fiscal policy. US expanded its primary deficit by 40% of GDP from 2017 onwards. The closest major economy that came anywhere near that was Japan at like 12%. So you got to understand, like what the US really did was extraordinary. It wasn't a global fiscal expansion. It was an American fiscal expansion. The bond market is saying no more. Congress is saying no more. President Trump can't even get $2,000 tariff rebate through Congress. He won't get it. And then finally, I think the voters, and this is controversial, many of your listeners will disagree with me, but I think even voters, even the ones on the left, I mean, their version of, narrowing the deficit is different from those of the right. They'll just raise revenues and taxes, but there is a rising median voter agreement that the deficits are too high. So yeah, I think that all of that together leads to a weaker dollar without in any way, shape, or form losing reserve currency status. Now, will the US lose reserve currency status? I think we need to break that down. There's reserve currency status, which is currency used for transactions, currency used for trade financing, and then what's in the vaults of central banks. Too many investors and sort of macro thinkers focus just on that currency in the vaults of central banks. Absolutely, the dollar is going to get crushed on that. I think it's going from 55% where it is today to about 35% in like the next 5-10 years. And that's just smart currency management. You want to diversify away from the US dollar when it comes to what's in the vaults of central banks. Gold has risen from 10 to 20% now. You've got a lot of other currencies that are rising to offset the US decline. But I think that's the least relevant. part of dollar as a reserve currency. I think what's most relevant is what are you going to sell a barrel of oil in, what currency? And also, what are you basically using to finance trade transactions? And on those two fronts, I don't see the dollar losing reserve currency status. In fact, some of the things that the White House is doing is probably going to strengthen the dollar as a transaction currency, particularly all the Genius Act stuff and, looking into stable coins. The U.S. is just far ahead of anyone else on that front.
This is the first time, Marko, in many, many years that I can remember hearing so many investors talk about how to invest outside of the U.S. It's like one day everyone woke up and looked at their portfolio and said, oh my God, all of my assets are in the U.S. and maybe that's not such a good idea. It was a great idea. It worked, but maybe things are different now. You, I know, have some thoughts because you sent me a lot of your research, and thank you for that. Europe, what are your thoughts on Europe?
I've had a view since 2024, since March of 2024, that after the U.S. election, there would be a significant rotation into the rest of the world. Now, again, just like with debasement of the US dollar, I don't like the sell America trade. I like the buy rest of the world trade. And now, are you going to have to sell some America to buy the rest of the world? Maybe, but not necessarily. Not all investors think that way, and many are just going to put the incremental new dollar of savings to work somewhere else. So on that front, I think that I am excited about the rest of the world. I think that the reason I'm excited is actually that President Trump is catalyzing structural reforms and fiscal policy around the world. He's being very honest, brutally honest, and he's telling to the rest of the world, like, look, you're going to have to, kind of be on your own a little bit. You can't just build stuff and expect Americans to buy them. That's not really a business model that works. And so a lot of the countries are not just fiscally stimulating domestically, like Europe is. One of the reasons to be bullish Europe is because, Germany is on an investment kick. Friedrich Merz, the chancellor, at Davos was very clear that he intends to finance a lot of investment. Folks, I think, sometimes underestimate why that matters. They're like, well, it's just Germany. Well, Germany is the third largest economy in the world, so this is relevant for Europe, but there's more than that. It's not just that other countries want to stimulate fiscally. They're also starting to think about the ways that their economies have been unproductive, uncompetitive with the United States of America. If the United States of America is not going to share its final demand with you, well, you're going to have to then figure out how to structurally reform domestically. Sorry, my dog just went off. It's not just so much that they're going to fiscally stimulate the economies, but there's also a lot of structural reforms that are happening. Canada is solving inefficiency it's had for 150 years, where provinces don't have free trade amongst each other. Europe is starting to look into completing the single market, which is completed in goods, but never got completed in services. So that will lead to a wave of M&A activity. And then you have idiosyncratic reasons to be bullish about particular economies. In Europe's case, the one that I think is the least appreciated is that Europe will be drowned in a tsunami wave of LNG supply. There's just too much LNG supply coming online over the next couple of years, thanks to US, Qatar, British Columbia, and not as much demand as I think a lot of these producers thought there would be.
Really? So you think LNG is not going to be as in demand as industry is predicting?
I think that there will be a lot of demand. It's just that the supply is overwhelming. And part of the reason...
Really? Okay.
Yeah, part of the reason is what happened when Russia invaded Ukraine is the tale as old as time. High energy prices are a cure for high energy prices. So a lot of countries that planned to build regasification terminals are actually less developed, like Pakistan, Sri Lanka, Bangladesh, India. And they just said, look, these prices went through the roof. I'm going to delay my regasification terminal. I'm going to continue to rely on coal. Now, good news for producers of LNG. You can build a regasification terminal in 9 months, as Europeans proved. Actually, Germans built them in 3 months. So it's not like this is going to be a permanent state of affair, but I do think that just the supply is overwhelming. There's going to be a lot of it. And so European electricity prices that have made many parts of their industry uncompetitive, particularly the energy intensive one, those are going to structurally decline further. So between that, structural reforms, and then fiscal policy catalyzed by basically like Trump's meanness, I think that Europe is in a sweet spot.
So Europe's a big place, and it's an extremely diverse place. It's has a long history of infighting. It's not one place, right? It's a spot on the map where there's many countries. So can we split it up? Simply start by splitting it up between East and West. Like would you favor one side over the other?
I would disagree with that premise.
Really?
Yeah, that's why I'm so bullish. You've got Vladimir Putin and his aggression on one side. You've got Donald Trump and his aloofness on the other side. And so Europe is actually becoming more and more of a one place where you can think about sectors, not necessarily countries. So no, I would actually tell, first of all, think about European banks, which have outperformed Mag 7 for the last 18 months as an example of this. You should start thinking of Europe in sectors, not necessarily countries, number one. Number two, there was this German finance minister two-speed Europe proposal that was just revealed a couple of days ago. And it involves Germany, France, Italy, Spain, Poland, and the Netherlands. 6 countries. So EMU 5, as they're called, plus Poland. And they intend to integrate even faster without the Commission, without the EU. And this is really, really positive because investors always talk about how European companies don't have as high profit margins as American. But why? It's because of the point you made. There's just too many jurisdictions, and each jurisdiction wants to have like 3 telecom companies. So you have this incredible situation where an average telecom company in China has 400 million customers. An average American telecom company has 120 million customers. Average European, 2 million customers. It doesn't mean that their product, actually many of their products are far superior than we have. I mean, I'll tell you, driving from Santa Monica to Malibu on PCH, good luck keeping your conversation. And it's like you're in LA on the most iconic highway in the world, and your call is dropped like 3 times. So it's not that the product is worse, it's that the regulatory environment reflects what you said, which is a very divided continent. I believe that the geopolitical environment today, and this is a perfect example of GeoMacro, it's the geopolitical environment that is finally going to force them to solve these issues. And just from history, what we know is that when countries integrate, where you get disparate units to become one, like the 13 colonies of the United States of America, as an example, whether it's German states that Bismarck united, Garibaldi in Italy, it's very rare that people unite because they love each other and they want to be in the same country. They do it out of fear. And I think that we're finally at a point where there's sufficient fear in Europe for this kind of reform.
You have one particular country in Europe that you've highlighted in your research that really surprised me. And then one of the reasons it surprised me is because it's one of the countries that shows up on a lot of screens for negative demographics. Like I was just researching with my team last week. What are the areas of the world with the fastest growing middle class, and what are the areas with the fastest shrinking middle class? And Europe shows up on the worst. So, like a lot of European countries show up on sort of the bad side of that equation. Spain in particular, Italy, Germany, all in the top 10 over the past 10 years, shrinking middle class. But you like Spain. You mentioned Germany. What do you like about it?
So with Spain, Spain has captured a lot of the manufacturing from the core. So it's already done that. And it has
Is that because of cost?
Yeah, partly because of cost, but it's also because of high quality. So it's kind of a sweet spot in that way. Its banking system is extremely robust. Spanish banks, from a retail perspective, we're not talking investment banks, but retail banks, they just know how to do retail banking. And then finally, the demographic issue is sort of, I don't want to say solved, but it's kind of solved. Very low birth rates, for sure. But Spain is the gateway for Latin American immigrants to Europe. And we're talking a lot of them. Yeah. And, and these are pretty high quality, like carefully selected immigrants. Not always, obviously, but remember, you can't walk or swim to Spain. So that creates barriers for immigrants to enter. And so you are getting some filtering. Highly productive, for the most part, educated, hardworking people are entering. And there's no cultural problems. I mean, many of these places were obviously, parts of the Spanish Empire, religious, linguistic, in many ways, ethnic similarities help with integration. And so I do think that Spain, in many ways, is the tip of the spear for the US, for Europe, in terms of both growth. I mean, they have in just growth outcomes, although that is backward looking, it doesn't guarantee future returns. But for the past 4 years, it's one of, if not the best growing European country. And it's become an entryway for a lot of very high quality migrants into Europe. Now, one thing that investors have to understand is that Europe has a free movement of labor within the EU. So once you enter Spain and you get a work permit, you're authorized to work anywhere else. You can just, pick up and go to Finland if you want. Obviously, language is a huge barrier for Europeans that it isn't in the US, but increasingly that is being solved through technology or just use of English in many workplaces. Not all, obviously, at a very high level, But my point is that this is very beneficial for both Spain and for Europe. On the other side, you have Poland. I think Poland's going to benefit considerably from rebuilding of Ukraine, but also it's already benefiting. It's already benefiting just from immigrants from Ukraine, who are also another example of very high quality migrants that have come to Europe. So when people say to me, Marko, how can you be bullish on Europe when demographics are so poor? Remember, unless you're investing on a 30-year horizon, pump the brakes a little on the demographic story. I can be bullish 3 to 4 years and make pretty good returns. I don't think anyone's going to frown on that. But the second thing is, I'm not sure that Europe has worse demographics than the US. US is in the process of effectively stopping migration. I'm not criticizing that. There's many reasons to do that, but that's what's happening. I think President Trump plans to restart it once it's kind of reset at a new baseline. Got it. Cool. Might work, might not work. We'll see. The fact of the matter is it's a pretty sudden stop in migration, which will collapse American labor force growth. And on the other hand, you have Europe, where this adage that Europe only attracts low-quality migrants and cannot be integrated is just false. Between Latin America and Ukraine, you're talking millions of people entering Europe and contributing quite significantly to potential GDP growth rate.
Okay, last question on Europe. How much of your thesis ties to defense? Because clearly they are in a position where they need to spend some money on their own defense.
My thesis rests on 7 different pillars. Defense is just one of them. We talk about migration. We talked about integration and structural reform. We talked on fiscal policy. And then what we didn't talk about is valuations still favor Europe. We also should talk about the fact that I think Euro has more upside. So as an American investor, simply just buying a European assets exposes you to that currency difference. And then finally, one thing we don't talk about is domestic politics. European integration is kind of a sold issue. Even in Germany, where Alternative for Deutschland is leading in the polls, depending on the polls, they're considered a very Eurosceptic party. They're actually more like anti-immigrant party than they are Eurosceptic. In fact, when President Trump, was very aggressive towards Denmark on Greenland, it was kind of shocking to see some of these supposedly Eurosceptic parties defend Europe and its sovereignty. It's sort of a sign of maturing. And then finally, yes, there is the defense thesis. I am bullish. I think that for investors who didn't buy European defense companies, who missed kind of the huge rally, wait until Ukraine and Russia get a ceasefire. Once that happens, I think we'll get a bottom, because European defense stocks are not going up because of one war, one conflict, one Russian invasion. They're going up because of concerns about future invasions, and for 2 more reasons. These are very good companies. They make very good defense products for the rest of the world. The rest of the world in this multipolar world we live in is going to need a lot of defense goods. And then finally, there is going to be a rotation out of U.S. military procurement towards European, Europeans are not going to spend more on defense and support American economy. They're going to be nationalist about what weapons they buy. So that's a pretty good gravy train, not just from new demand, but also rotation out of some of the long-term U.S. contracts as well.
All right. Some interesting thoughts there, Marko. Where can people learn more about you and your research?
Well, bcaresearch.com, of course, that's where all the research is held. But there's two other ways to kind of get some of my thoughts. Not so much the investment views, more the geopolitical ones. I'm pretty active on X. And then finally, there is a podcast called Geopolitical Cousins, where I try to make geopolitics entertaining again.
With my friend Jacob Shapiro. Yeah, it's great.
That's right. Yes, Jacob and I were cousins, not really, not literally, but mentally. And so we try to, the reason we have that podcast is because I think that sometimes people overcomplicate geopolitics. And also I think that sometimes people get very, very, analysis is difficult in this very partisan time. And so we try to cut through that with as much of an unbiased and nonpartisan lens as we can.
It's hard to get away from narratives too, right? Like narratives are great, but sometimes they can get in the way of real-time analysis. Like the situation changes and you're still living in the old narrative.
No, absolutely. I think narratives are cognitive, shortcuts. And that's great. Like we all use them. Stereotypes, narratives, they're crutches that we use to make, sense of life. But yes, that's why we have this podcast kind of to break those down. And what we find, Jacob and I are not exactly aligned on the ideological or like viewpoint spectrum, but what we find is that we kind of defend the other side that you would think one of us would actually adopt or be against. And so that's always cool. It's just the power of conversation. And I think not enough of us have that. We're just shouting at each other, or we're just self-selecting the social media to support these narratives, which then become ossified.
All right. Well, Marko, it's always good to see you. I really appreciate your time.
Thank you for the platform, Ed. It's a real pleasure.
Hey, if you're still with me, then you will definitely like my weekly newsletter, where I dig deeper into the topics that we cover here on Global Macro Update. You can sign up by clicking the link in the description below. I'm Ed D'Agostino from Malden Economics. Thanks for joining me.